The accounting equation is something that, as a small business owner, you've likely heard of. But do you really know what it is and how it impacts your small business? We'll cover this in today's video. Let's get started. What is the accounting equation and how does it impact your small business? What is the accounting equation? When your bookkeeper references the accounting equation, they're simply talking about the representation between your assets, liabilities, and the equity within your business. More simply stated, every entry into an account requires a corresponding yet opposite entry to a different account. This means that one entry on the left side of the equation is a debit and the other entry on the right side of the equation is a credit. Again, the left side is a debit and the right side is a credit. This may seem backwards or even a bit confusing at first. For you as a business owner, you simply need to understand that your debits need to and will equate your credits. What the accounting equation looks like in its most common form is this. Let's talk about an example. Assume that you got paid cash for an outstanding invoice. That invoice would be recorded as an accounts receivable and the cash would be, well, cash. The proper entry using the accounting equation would be an increase or debit to your cash account and a decrease or credit to your accounts receivable. This is because your accounts receivable have now decreased by the amount of cash you just got paid. This may look something like this. You can see in this that the net value of this transaction is zero because your debits and credits are equal and opposite to one another. This format also reflects what you'll see on your financial statements, more specifically, your balance sheet. Now, let's take a look at the simplified balance sheet template. This is a simplified version of what a balance sheet may look like. In reality, it may be further broken down into current and fixed assets, current and fixed liabilities, and what form your equity is in. Under each category, you'll place the total value of each category according to your ledgers. So, let's break down each of the components. Assets. When you look at the assets of your business, you're looking at anything that has value in your company. Your business's current assets include not only the cash that your business holds in the bank, but also anything that can be converted to cash within 1 year. Fixed assets, on the other hand, include items that are typically harder to convert to cash and may take longer than a year to convert. This can include any real estate holdings or intangible assets. Intangible assets are assets that don't have any physical substance to them. This can include intellectual property, such as patents or trademarks, or other assets such as software or licenses. Although these things like property, goodwill, investments, and other long-term fixed assets may not have cash value today for your business, they still have a positive impact on your business in the long run. Equity. When you look at the equity that you have in your business, it's important to remember that this includes more than just capital. Equity also includes retained earnings, which is any profits that your business has accumulated and held onto within your business. Finally, equity can include preferred stock. Preferred stock is similar to regular stock, but it provides some protection from shareholders as well as giving the business owner priority when it comes to distributing dividend payments. Liabilities. Your business liabilities include any debt that your business may owe and is yet to pay for. The business accounts payable can include any money that you may owe to any of your suppliers or subcontractors. Similar to assets, liabilities can be broken down into current liabilities and fixed liabilities. Your business's current liabilities are any debts that are expected to be paid off within the year. This would include any of the accounts payable mentioned before, as well as the current year's salaries or wages. The business's fixed liabilities could include any debts that will take more than 1 year to pay off and typically include any bank loans or long-term lease obligations. The accounting equation. The accounting equation is key to understanding your business's finances. Now, let's look at an example. You've gone to your bank with an impressive business plan, but you don't have any capital of your own to invest in the new business. The plan was so great the bank decided to lend you $2,000 to start your business. This loan is a liability since it's something that your business is now going to need to repay. It's also an asset though, because you now have $2,000 to get your new business going. Since we use double entry accounting to keep our books balanced, our equation will look like this. As we noted after the first example, parts of the accounting equation can be broken down further to provide you with more details. In that example, we showed you that assets equal capital plus inventory plus liabilities. The accounting equation can be further broken down to look like this. Revenue is simply what your business has been earning throughout its operations, while your expenses are the cost that your business is incurring while you're operating. Owner draws speak for itself. This is the money that you've decided to withdraw from your business. When you decide to pull this money out from your business, your balance sheet will show you that you've caused a reduction in your capital. As a business owner, you may ask why the accounting equation matters to you. Simply put, it provides a better picture of your business's finances, not only for you as the owner, but also for any outside investors or banks. The accounting equation can also provide you details on how to create future projections. For example, it'll allow you to see if you're able to purchase the new equipment that you've been looking at. It'll also ensure that your balance sheet is balanced. Need help from an expert? We understand that double entry bookkeeping and the accounting equation can seem a little bit confusing. Let one of our experts at Valley Business Center help. For over 30 years, Valley Business Center has been providing comprehensive bookkeeping, payroll, and tax services to our clients in Whistler, Squamish, the Sea to Sky Corridor, and Metro Vancouver, BC areas. Valley Business Center provides reliable and effective services to all clients. Don't forget to hit that subscribe button and also hit the notification bell to hear more helpful information. Thanks so much for watching.